Hey, everybody. Welcome to Market Mavericks. I'm joined by the crew. This is the core. This is the everything right here. And we are back this week for Market Mavericks. So let's get right into it. Wow, where do we start? Do we start with Bitcoin trying to push through 68,000? Do we start with economic data? What are you guys thinking?
I think the big story right now is going to be obviously retail sales, right, Mike?
Yes, I'm at the Money Show in Orlando, and I did meet a few people said they watched the program, so we got that going.
Awesome.
I haven't had a chance to dig into the data. The bottom line for me is for the last few years, the annual pace of gross retail sales is still below CPI. I think that's still the case, but it's been a longer term trend. But obviously today, the key fact is the U.S. consumer is much more resilient than most people suspected. We're creating jobs. Unemployment claims are low. It's a wonderful situation. And the Fed started easing, which is the problem now. A lot of people are saying maybe they don't need to keep easing. The next meetings after the election, and if President Trump is elected, there's really little reason to ease, potentially because they might have to tighten, because if he has very inflationary rhetoric in his campaign speeches.
Do you guys think that it matters one way or the other? Like, are the markets moving on one candidate winning versus the other, or does the market kind of just is doing its thing?
Let me just pop on that one real quick, and then Scott, I want your view, because we had a great Sonali Bostic had a great interview with Stanley Druckenmiller yesterday. I really enjoyed listening to that. He nailed, yeah, we all shaking hands. He nailed it. Basically, he's right. I believe the market's priced right now for a Trump victory, and potentially there's a good chance from my Washington correspondent, Bloomberg Intelligence, Nathan Dean, that the Senate's going to swing Republican. So we're priced for that. And you can see that in bond yields. I mean, one thing I'm still holding on and still really bullish on is TLT, but the backup's been pretty bad, pretty tough lately. But we've had a pretty significant backup. Bond yields are jumping up. Crude oil's dropping. Unleaded gas is dropping. The drill it will. Stock market's up. And market's priced for Trump to win, which means the risk is that we get a Harris presidency. And I think the best thing for the bond market, bad thing for gold, would be if we get a Harris presidency and then we get the legislative branch leaning Republican. Now, I think that's what's going to happen, but there's a lot of risk there. But right now, the market's priced for, Druckenmiller said it, I agree with it. And so the trading for you, potentially you, Gareth, the trade potentially is doing something if Harris, again, of course, we also have to have a complete, fluent, nonviolent transfer of power. And we do still have the risk that we won't have that.
And so just to clarify for myself and everyone watching is, so if Trump wins, is he more inflationary with all these tariffs?
Yeah. Indisputably. Every single economist points it out. Not just tariffs. The only thing that's deflationary is the drill at will. Complete animosity for the dollar. I mean, that's from my colleague Stanley Motion wrote a book about it. He's very, wants to help increase U.S. manufacturing, but it's very much akin to the Smith-Hawley Tariff Act in 1931, I think it was, which kind of accelerated the Great Depression. But tariffs will only increase. It's a tax. It's the importers have to pay it, so it's a tax on all the goods we have to pay. But it's also very bad for economic growth. But it's also the tax cuts and increase in spending. It's every economist, certainly Larry Summers, who's a bit of a leaning the other way, pointed out that there's everything about the Trump presidency, new presidency, and particularly if he has both sides, if it's a red sweep, it's very inflationary. And that's why I think that the tilt that the market's not considering yet is the risk that we have Harris gets elected and then the counterbalance of that Republican Congress. It would remind me of Clinton Gingrich. Remember that the contract with America? Well, that's the last time we balanced the budget deficit. So if we get that type of situation, that might be the ideal situation for things like the bond market, but stock market and the key here, I'll tilt over to Bitcoin. I think the problem right now the market's facing is we have a record-setting stock market's potentially peaking a little bit. Gold is still record high as of right now. And the Bitcoin space, the crypto space needs lower Fed needs lower rates. They need stimulus. They need lower rates. And right now the trade is, well, we're creating more inflation. Stock market's going up. The stock market, everything's fine. There's good jobs. If Trump's going to pump up the liquidity, add inflation, there's no reason to cut rates. In fact, you typically have to hike rates in that environment.
So are you, and this is something I never thought I'd hear, but I am almost getting the sense that the Democrats are slightly more the party of fiscal responsibility. Did I
Not
ever
really.
think I would say those words?
It's what's crazy, but it's a check and balance. So if Harris gets elected, the Republicans will be behooved to do everything they can to prevent her to be successful. I mean, that's just the check and balance. But I enjoyed sending to editors yesterday. Today I published that the headline that editors kind of took out for me, which is a little inside scoop, is the Trump trade is really helping Harris. So there's two key factors to help consumer sentiment before an election or any time, is when unleaded gas prices go down and the stock market goes up, and both are happening right now. And so that Trump trade might actually help the incumbent, which is quasi-incumbent, not that, the same administration, similar. But it's a unique situation. But the key thing is volatility. We're not getting that yet. The market's priced for perfection.
Scott, so is Bitcoin pushing up on that same premise then, that Trump is obviously, he seems to have been more positive towards crypto?
I think that there's a sentiment of a Trump trade, right? As Trump's odds increase of winning, which you can see on Polymarket. I mean, he was at high as 63% at one point today. Right now, you can show my screen. He's at 60.7% with Harris at 39.4%. I don't think this is necessarily reflective of exactly what the odds are of a victory, but I do think that the Bitcoin chart follows this to some degree within this choppy range, right? So important to differentiate. Yeah, maybe we have this move from 60 to 67, and maybe that's slightly affected by the odds of Trump winning at this moment, but it's still a nothing burger when you zoom out on the chart, which is still chopping sideways effectively since the all-time high in March. I mean, I kind of laugh. I brought this image up when you guys were talking about inflation and which party's better or worse. This is how I think about the two parties when it comes to inflation.
I'm right there with you.
We can debate whether Trump's tariffs are inflationary, but we certainly know that the Democrats are going to continue to spend their asses off and come up with creative bills like the Inflation Reduction Act that add trillions of dollars in spending. I mean, listen, there's nobody's going to ever address the massive elephant in the room that should be the largest issue in this election, which is the debt spiral, right? And the ever increasing national debt. I mean, there was a day last week where we added $300 billion in a day, right? We're having $1 trillion every 90 days. That's an unsustainable debt spiral. I don't care how you parse it. And nobody's going to run on austerity, right? So listen, like maybe Trump is more inflationary because of tariffs. But maybe if he actually intends to appoint someone like Elon Musk and have a Department of Government Efficiency, DOGE, very cute, the Department of Government Efficiency, maybe they actually do find some places to cut expenditures and that offsets some of it. To be quite frank, I don't think there's enough to cut anywhere in the entire budget when your interest payment is over $1 trillion. So yeah, you're going to cut a $300 billion entitlement by 20 or $30 billion, right? I mean, you cut a 10% of one of these entitlements, and it's effectively a day or a week of the interest payment. So I find that to be unsustainable, and doesn't really matter to me in that regard which party's going to win. Now, if we're talking specifically about Bitcoin, we got to get above 70. Got to start pushing towards new all-time highs if we want to really start talking about the next huge move. I would say there's actually a very interesting narrative in crypto that's worth unpacking, and that's what's happening between Bitcoin and altcoins. If you bring my screen back up, because this is Bitcoin dominance, a chart that a lot of us look at. Some people actually chart it. I don't really believe it in that. It's not a traded asset, but it does show you the relationship between Bitcoin and altcoins and where the liquidity is in the market. This is at 59%. You'll see we haven't been at these levels since 2021. We're looking at now March 2021, the last time we were at 59%. What this is telling you that even with millions of new altcoins coming into the market, Bitcoin, whether up or down, is just sucking all the liquidity out of the crypto market right into Bitcoin. So even though there's a select few altcoins that have outperformed, writ large, it's been a horrid time to be in altcoins. And if this continues to break up and make highs, altcoins are just going to get disproportionately wrecked by Bitcoin. And so if you want to start talking about the real cycles, at some point in this cycle, Bitcoin evens out, this thing falls off a cliff, and altcoins go crazy. And we have not seen that. I mean, this has been a trend now since September 2022 in this bottom. This is a long time.
Can I piggyback on that, Scott?
Yeah, sure.
Gareth, did you have another thought?
No, you go first on this, and I'm going to bring something else up.
What I find about that is the pattern recognition fact that altcoins typically outperform Bitcoin when we have a record-setting stock market like the NASDAQ. And we've had that. NASDAQ's obviously pulled back, but I mean, that's the problem. I think when we do get some normal back and fill in the equity market, that to me is showing this the signal I'm seeing from things like gold outperforming, crude oil declining, the stuff I see from commodities, and volatility, almost multi-decade lows only can go up stock market. So what you point out to me makes me very disconcerted when we have a normal. I hate to because I've been wrong on risk assets, right, on gold, but when we have a normal back and fill in the stock market, that usually is going to mean the problems of the alts, and maybe it's helpful for digital gold.
Yeah, one thing I just brought up on my chart, which I think is fascinating about gold, is that we've now had on the dollar, almost 3 weeks of vertical movement, and gold is still at all-time highs. That is, historically, that's unheard of. This would have usually crushed
everything.
Gold.
Bitcoin, stocks, gold,
Yep.
It's all been going up sort of during this trend.
Yeah,
so
yeah, remarkable.
I'll be presenting this afternoon. I presented it before. I start with one key slide about why gold has been and should continue performing. I start with the date of February 4th, 2022. That's when the unlimited friendship was declared. For some of us who remembers duck and cover, to me, the world shifted on that date. Gold is up about 50% since President Xi and President Putin cozied up. Crude stock market's up maybe a third, total return S&P 500. Bitcoin's up about the same as gold, which it should be up a lot more. Obviously it's a point in time, but it was a significant point in time. And crude oil and most commodities are down. To me, that's that shift on a global stage that's deflationary for broad commodities. And the key thing I like to point is I see in a similar way, copper and Bitcoin on a chart and copper on a chart look bullish. People have claimed I was a technician. I'm anything. But if you compare them to what traditionally they are correlated with, they're very bearish. And that's like to say copper's traditionally correlated with stock market, certainly in China, but that's, China's been bouncing. And Bitcoin is typically outperforms S&P 500 and gold. But you compare those to those underlying assets, and I see a chart that looks bullish, but the fundamentals to me underlying bearish. And that's where I'm kind of concerned that I have to stick with that thing with Bitcoin. The peak was 73 in March, and gold is at a high right now, and S&P 500 keeps making highs, and Bitcoin's catching up. But again, we have a Trump trade, and we'll have an election pretty soon, and this is a great, I think, trading environment. But I'm sensing a lot of risk managers are taking risk off and using dribs for exposure.
Gareth, if we view this as a Trump trade, I want to ask you a question. If we view this as a Trump trade, wouldn't him actually being elected be the sell the news event of the Trump trade that happened before?
Yeah, I think that makes sense. That does make sense. The run
I'm
up.
not saying that's what will happen, people. I'm just saying that in theory, when you have a trade that's leading up to an event that's an expectation, usually when that expectation plays out, that's when you see the correction.
There you go.
And case in point, to prove that, you have Apple's. Anytime Apple debuts their new iPhone, it runs up and then sells off. And then look at Tesla. What was it, a week ago when they debuted their robo-taxi? Talk about the stock getting slammed afterwards, but ran up into that event. So yeah, there generally is that sell the news event. There's absolutely a possibility there. I think it's more also the unknowns about the rhetoric that comes out from Trump too. If he wins, does that increase risks for the market that we're not pricing in now? I think this market is fascinated with this AI trade. Taiwan Semi today, blockbuster earnings, just keeping these markets propped up. But I do think there's a lot of risks, like Mike's saying. The other thing I wanted to just circle back to is we were talking about how, even if you do entitlement cuts, 30 billion, it's not even a drop in the bucket for the US debt. Where does that end, guys? Where do you see, if you could map out 5-10 years out, we know with Italy and Greece back, I think it was 2011, Mike, remind me if I'm incorrect, but there was austerity that was forced on them by the market, right? And is that where we're going? Because no politician wants to do it, right?
No.
It's unpopular. It's not going to get them elected. So they're going to keep spending. But at some point, the market does it for you, right?
Yeah. Well, that's been the unique thing. The U.S., typically people say it's bad for the dollar. I just love to hear that. I actually saw Peter Schiff speak a little. I said hello to him. Remember, we used to be neighbors, and I wouldn't say friends. But, how about that the dollar's depreciation? I'm against what? What? Against the gold? Sure. Against the stock market? Sure. But against a basket of fiat currencies, there's nothing even close that's better that gives you 4% guaranteed return. It's just not even close. So, and then I always like to tilt over the cryptos when people are bearish the dollar. It's like, the widest trade of crypto is not Bitcoin, it's Tether, it's the dollar. So the dollar's unstoppable. Sure, it needs to be back up a little bit. It's strong, But versus what? It's not versus a basket of fiat currency. So I like to go to that macro always on the dollar. And certainly with this war going on, people are all starting to realize that, okay, well, there's only one place to go. It's either you're with us or against us. So to me, the macro is we should expect that question you just answered will not matter until we know the results of the election in the future. We just will not. That's going to change everything. If we have a Trump administration, number one, you have to expect volatility at multi-decade lows. If you take out the T-bill rate, certainly just a 200-day moving average of VIX is at an 8-year low. You have to expect it to go up. And
don't we expect VIX to go up regardless of who wins just because it's been down so long?
But exactly. So that it's going to be a lose-lose. But Trump is known as a very volatile person. And we can see from his rants lately, he's getting older and much more ornery. So this will be global volatility in a scale we might have never seen. I mean, it's very similar to what happened during the Great Depression. It just tariffs, the way he's talking about, thousands of percent are. Europe's already tilting towards a recession. Germany's in one. China is hiding it. It's potentially depression. They have to do stimulus. And U.S. is a shining star. So to me, that's one thing you should expect. Maybe gold, Bitcoin's the savior in that space. We all know gold is, but that's why I can't really answer that question until we get back past November 5th. And we don't know for sure on November 5th if we'll have a definitive shift of power. That to me is a key thing. The market's not even priced in yet. It's not pricing any risk at all of an election outcome that's not clear.
And does that includes obviously a contested election, I'm assuming too. Like, I mean, I don't think the markets are even pricing in that possibility, but it's very likely something like that could happen.
Yeah, I think Stan Druckenmiller pointed that out. And there's
no
risk.
Druckenmiller say he's voting for neither. I mean, yes. He was to the point where in the interview, he said, doesn't matter. I'm not voting.
I think he's going to write in.
Tim Draper, I saw announced that he donated to both. And Druckenmiller said he's voting for neither. It was an interesting day for billionaires.
Walking a thin line there, trying not to piss off either side.
Can I ask both of you a question? What's kind of spinning my mind at the moment and is not getting enough conversation is how 10-year yields are now at basically 4.1% after a 50-bip rate cut.
Mm-hmm. Yeah, so that's a sign for the Fed. That's the sign the Fed made a mistake. So right away, it's still that they are priced for another 25 basis point cut, but that's a bad thing for the Fed. That shows that we're going to go back to the cut too early in the 70s. We got the inflation in the late 70s. It should not happen. Now, short term, it's deleveraging. Obviously, people like me were way too long, and that's the most leveraged market on the planet. So yes, it's a little bit of a pain for long-term gain. I think it's going to be, but right now, that's a sign. Sorry, you shouldn't be cutting rates in this environment. With the stock market on a tear, which is what we pointed out. So that we'll see how that works out on November 7th, after the election. But the election's the key wild card. For now, I still think gold is telling us it's going to be one of the next big trades. It's going to tilt. It's gold versus bonds is very expensive. So I've been early on that one. You could say I've been wrong in bonds, but not on gold.
I'm still in TLT. So, I mean, you're saying for my own echo chamber benefit of my own portfolio that bonds catch up?
Well, that's so much catch up. See, that's the thing. It's
mean reverts.
One of those, mean reverts means when it happens, it will be a big trade. I mean, let's just look at China's 10-year right now. It's 2.06, I think, or something like that. The low has been 2.03. It's dropping again. It's just a matter of time. So I like to point out the facts. If I just republished on this, is you took it that people keep saying the deficit, like, yes, okay, I'm 60. I've heard that for 40 years in the markets. The U.S. deficit, yes, it's increasing. But you have to compare it on the global scale. If you look at the average of the top 5 other countries in the world, their 10-year note yields, which, up to India, their 10-year yields are almost 100 basis points less than the U.S. That shows signs of deflationary forces, most notably in China and Europe. If you look at right in 2007, before the global financial crisis, all those yields were about 100 basis points above the U.S. So this is to me where if we get a little bit of that normal inversion, remember I'm a global commodity guy, so I see deflation from commodities. That's a big trade. It's been stopped out in the short term.
So one of the charts I have, or the chart I have up here, guys, is the 10-year yield chart. And the reason I put this up is because what we can see is based on technical analysis, you had this breakdown of this trend line. And usually what happens is you revert back to the scene of the crime. And so the idea is here 10-year could go up to about 4.38%, 4.35. But that's when the next, so the breakdown is still intact. This is just a reversion back up. And then the next leg down should actually take us a lot lower. So that kind of goes along with what you guys are saying, maybe a little bit more upside, but down the line, TLT is probably the place to be.
Classic pain before the gain. And when any of us have ever been in a good long-term position that make a lot of money without paying first? I mean, Bitcoin there knows that. But that chart, Gareth, looks very much like crude oil.
Yeah, you're right. You're right. And speaking of crude oil too, is you were mentioning maybe it's Trump that oil hasn't gotten a bid, but this has been one of the things that I've been harping on, that things aren't as good as the media, the narrative is making it out to be. That oil, why is oil hovering near multi-year lows versus near highs? If the U.S. economy is going to have no recession at all, China's on the rebound, shouldn't oil be at 80 or 85 or $90 a barrel?
Exact opposite. The narrative in oil is completely shifted, which makes me as a contrarian a little bit worried. As you know, I've been way too early being bearish oil on the way up to above 100 and still think it's going to go to 40, maybe below, at least below 56. It's at a situation now where almost the whole market gets it. All the major and IEA, EIA, and OPEC, all the major agencies get it now. We have a massive excess of supply and decreasing the demand, most notably from China. China imports of crude oil about 11 million barrels a day, about the same as 2020. That's never happened where they stalled that long. Diesel demand in China, imports of crude oil, diesel demand in the U.S., unleaded gas demand in the U.S. are all declining. I just published on that recently, and supply is way up. The main reason to shut that off is lower prices. You got to get U.S. WTI below $56 a barrel, which is according to Bloomberg New Energy Finance is our break-even cost of production.
Scott, walk me through this chart here, this chart of Ethereum. What's going on here? Why is it lagging Bitcoin so much?
Well, I showed you Bitcoin dominance. So when you take a look at Bitcoin dominance, you obviously know that Ethereum, being the second largest asset in the market, is going to be one of the big players in Bitcoin dominance and heavily weighted, right? Sort of like looking at the DXY and considering the euro, right? It's obviously the biggest part of that basket. So Ethereum is the largest part of that basket. You can say that Bitcoin dominance is driving Ethereum down, or you can say Ethereum is driving Bitcoin dominance up. I look at the latter. I think that there's just been no trade for Ethereum at the moment, but once again, this is where you would be if you believe in the cycle. Bitcoin rages, everybody gives up on altcoins, it's dead, it's zero, it's over, and then Ethereum goes up 50% in a week, right? And you say, holy crap, I knew that was coming, right after everybody's already capitulated at the bottom. Nothing surprising to me here. In fact, the case, people in the echo chamber would tell you that Ethereum is stuck in the middle, right? Bitcoin has gotten the bulk of the interest from institutions. And on the other side, you have the Solanas and the Suis and the Aptos and all these new, faster, cheaper layer ones that are eating its lunch from that perspective. But I think if you're standing outside this echo chamber, you say Ethereum has an ETF. Larry Fink talks about it every day. Every day is literally like tokenizing real world assets on Ethereum and has a vested interest in sending Ethereum to the moon, as we would say, obviously, in crypto. And I spoke to Matt Hogan the other day, and he's been talking about it quite a bit. He says when Bitwise is out on the roadshow, there's equal interest right now, not buying yet, but equal questions about the Ethereum ETF now as there are to the Bitcoin ETF, now that the learning curve with the Bitcoin ETF is there. So that was a very long-winded saying of the more wrecked it gets, the more interested I am, because I do think there comes a time when there's a huge move to the upside. I can't tell you if it's bottomed or bottoming or will bottom, but I'm going to tell you right now with very high conviction that Ethereum will trade much higher than it is right now at some point in the coming year.
So can I piggyback on that a little bit? I'm just had lunch with my colleague Eric Balchunas, who most people in Bitcoin became widely known because he nailed the ETFs launches, and he helped me figure out. He showed me how he got a lot of that information. But one thing Eric Balchunas pointed out is what I had known and expected. A lot of the ETFs accumulating, and you're seeing accumulating in Bitcoin and some Ethereum are hedge funds, because they are. It's environment I came from. It's what hedge funds do. It's what we do in this country. Anytime you can get leverage up 10, 50, 100 to 1 and do two sides of the trade that are the same thing and just hope for them to narrow, That's what's happening. And that's what's happening in a big way in the whole crypto space, starting with futures. And that's where, Bitcoin used to trade 10 times the volatility of the S&P 500 and gold. Now it's 3 times. It's going towards zero. So that's the key point I wanted to make, and a key point I got from Eric. All that's happening, you've seen with these ETFs, is it's going into mainstream. It's making it easier to arb, in and out, no problem. And it should continue to squash volatility, where you're going to see Bitcoin and Ethereum trade more like traditional assets like S&P 500 and gold. And that's the key thing to rethink about here, is those days of those massive up 10Xs and 5Xs are over. You're getting some of the shorter term moves, but again, it's also the most widely traded asset on the planet, Bitcoin. If you can get a bot to kick in and hit stops like I used to do in the trading pits and make you 1 or 2% and then get out, that's what it's about. But that should be getting narrowed, continue to get narrowed with ETFs.
So one more question, Scott, and this is something from my personal need to understand, is if we look at a chart like Cardano or Avalanche, they're obviously at their near 52-week lows, if not at their 52-week lows. I was talking earlier, when I made that call on China, part of the thesis was that they were trading at 8 PE ratios. I have firm basis on a look at how much cash they have on the balance sheet. Essentially, these factors that allowed me to value them and say these are relatively cheap compared to US stocks. How do you do that on something like a Cardano? Like, how do you do your analysis? Like, what is it worth?
You sacrifice a unicorn, you mush it up, you take the dust, you throw it into the air, and you see what happens to the reaction on X.
Sounds like something with young kids.
Okay.
You can't. And yeah, exactly. You can't. Yeah. Okay. And that's just a reality of crypto, which is why technical analysis works so well on crypto charts, because there's not as much understanding, I think, fundamentally how to value these things. So we look at other metrics like network activity, wallets, the fact is, Cardano, I hate to even speak about it because people get so angry, but it's been a promise of things to come with Cardano that have not yet arrived. I can't say that they won't. I just can say that they haven't. So I think that it's most likely that things like this will lag behind the newer layer ones with more promise, right? So you kind of just get these. I'm sure this thing will move too. They'll all have their moment at some point. But would you rather be in Solana or Cardano right now? I think it's pretty obvious that you'd rather be in Solana, right? Because you can see the activity there. You can see how many people are using it. You can see how many new wallets there are. So,
gotcha.
I don't think necessarily if you've been holding Cardano for 5 years that this is the time to sell it. I'm not saying that, right? But I do think that, we're going to be a little more selective this cycle if we get one, right? The cycle is not promised, but if we do get a huge, infusion of retail liquidity at some point into the altcoin market, we generally see a lot more interest in the new, shiny, exciting thing. So they usually move more. That doesn't mean these won't, but there's so much supply of tokens in the crypto market. And they're unlocking even from these cycles right now. And I can't even tell you how many new projects are going to launch at the same time the minute that there's even like the hint of a bull market in altcoins. And I just don't know who's going to buy it all. So I think you're going to actually this time have to find the right ones that are going to move. They will, but everything's not going to move.
All right. Gotcha. All right. So in other words, a hope and a prayer. You just got to go for it, close your eyes and make the leap of faith to buy one and hope you do it right.
I mean, I think that if you're down, I think that there were fundamentally good reasons that the things that have moved so far, because we haven't had a true altcoin bull market, have moved. Sui, Aptos, they have announcements, they have new users, they have new things being built. There's a lot of reasons that those things, Solana, whether you like meme coins or not, there's indisputable evidence that the meme coin casino is alive and well, and it requires Solana to play, right? Yeah. So there are reasons that the ones that have moved have.
That makes sense. Yeah. And the one thing that's interesting about Solana here, I have it up on my screen, is that it has the same parallel bullish channel that Bitcoin does. The only difference is Bitcoin's at the high end of the parallel channel, but nonetheless, the channel is still there versus on a lot of the other altcoins, it is not there. So I think that is an intriguing aspect of it. All right. So lastly, we have 1 minute left. We have Netflix earnings after the close. Netflix is now down 2, 4, 5 days in a row. Any predictions on earnings? Any wise words going into the next couple of weeks with all the mega caps reporting?
That's on Mike. I had nothing on that. I have no idea what's coming.
Okay.
I do have one, just a comment what Scott said. I really think that's quite profound. What's point out what we're looking at in cryptos. Highly speculative risk assets. Trade them. I mean, I came from an environment and trading was everything. In futures, 20-to-1 leverage. That's just what I know. But don't underestimate what they are. They're just great for traders. But long-term buy and hold, maybe Bitcoin, the rest of them, just trade them and have fun. But I think that's what the market is. It's tremendous for trading, but that's about it. And if we get the macro to go down, the tide to go out a little bit, then we're overdue for that.
Gotcha. All right, gentlemen. Scott and Mike, thank you guys. It's always a really great discussion on here. And Mike, I want to just say, and Scott might agree with me on this, but your camera and your audio today are top notch, buddy. Like whatever you're doing. Oh, dude.
The iPhone's sweet,
cow.
man.
It's great.
Things are undefeated.
Wonderful, wonderful. We'll have fun at the Money Show there and have a great speech there, that great talk that you're going to be giving. And hopefully we'll see you all next week at Market Mavericks. Thanks so much, guys. Have a good one.
Guys.